Guys, you're welcome back to my YouTube channel. How are you doing today? I'm going to be explaining a very interesting and also an awesome way to look at the market with you. All right, before we start, right, just like what I said last 2 weeks, right, that after 2 weeks I'm going to announce the winner of the giveaway I am about to do, even though I have another giveaway to do in this content. All right, okay, before we start, before I explain what I want us to do, I will quickly want to do that um, uh, random comment. I'm going to use random comment picker right on YouTube, right, for me to select the lucky winner. And at the end of the day, I believe that everybody should be a winner because I'm going to give another opportunity for people to also participate in this. Okay, let's quickly go on to do that. So let me use the comment picker, right, just as what you can see here, right. I've already entered the link of the video is here. So just like what I asked you to do, right, is for you to use the hashtag liquidity, right, for the video. So I'm going to select some option. So I'm going to exclude replies to comment, right. So filter comment based on specific text. So let's use that. So what do we ask you to do? The hashtag liquidity. So let's see who is going to be the lucky winner. Hashtag liquidity. So let me start already. Let's see what we have here. Right, so this is the winner. As you can see, I'm not the one that actually did that. It's already here. So the winner of this game is Ibrahim Lawal. So this was a comment. You can search for it on the comment section there. He said it has total names is 49. So we have thank you for all the free content you have been sharing. They have been really helpful and maybe educative. I believe so. May God reward you and bless you abundantly. I say amen to your prayer. So this is the winner. So this is Ibrahim Lawal, right? So just like what I said, I gave you criteria to really to participate in this giveaway. So you must have actually subscribed to my YouTube channel. You must have actually liked that video, join our Telegram page, then also follow us on Instagram. So if all these 4 requirements are met, the fifth one is actually you making comment, and I believe you've already made comment. So if all these 5 requirements has been met, then you can actually send me a DM on Instagram or on Facebook. Sorry, I'm not on Facebook, on Instagram or Telegram for you to get your reward. It's just a token of $100, right? So you're going to get that immediately when you can prove that this is your account. Okay, guys, very quickly, let's get into today's class. So what do we have for today? Let's quickly see what we have for today, right, which is really going to be an episode 2 of what we have done. Don't forget, Ibrahim Lawal, make sure you contact me so that you can get all your all the money you have won. Okay, so also, just like what I said at the beginning of this content, I said I'm going to give another giveaway, and which is actually some people have really been asking me concerning discount. So I want everyone to actually participate in this, just as he's going to get $100. So also other people is going to get that opportunity also, and which will be in the terms of you getting a 15% discount on my course. 15% discount. 15% discount should be about $82. All right, that is a subtraction of $82 from my $550 course, right? $550 course, which implied that you'll be paying about $460 something. So if you're in for this, you can actually join as soon as possible so that you can also be a partaker of this giveaway. So that shows I'm giving $82 out. So this implies that we are going to subtract that amount from $550, and that is going to be how much you're going to be, so that every viewer or every subscriber or new viewer can also be a partaker of this giveaway that I'm doing. But basically, if Ibrahim Lawal also wish, then you can also participate in this one. And just like what I said, very soon, right, maybe when we reach 10,000 subscribers, I'm going to be giving 5 slots, right, to lucky winners, and these people will be added to my mentorship page, and I'm going to train them personally into profitability, and they are going to be very good and also going to become a professional trader. I promise you that. So when we reach 10,000 subscribers on this particular channel, just as you can see that we have about 6,000 plus now, right? But when we get to 10,000 subscribers, I'm going to be announcing that 5 winners, and it's going to be based on this video also. So you will need to comment at the end of this video. I'm going to really give you requirements to really do that. So I'm going to be selecting 5 people based on this video, right? So you'll be able to join my my mentorship page for free, right? And it's going to be lifetime. So the requirement of that is going to be given at the end of this video, and also that will be when we reach 10,000 subscribers. So I'm going to be using this particular video, right, to select the lucky winner. All right, so very quickly, what I have for you today, right, is the 3 basic rules to trade with the banks or institutions, right? Is to trade with the banks or institutions. That's really what I want to write, right? The banks or the institutions. So this is really what we want to look at today. And just like what I said, it's going to be a follow-up to the content I made 2 weeks ago, which is concerning order blocks, how to spot the best order blocks. And trust me, I've already given you rules that can actually guide you to trade an order blocks. Just like what I said, it's going to be like a follow-up to that video for you to understand how and when to select that order block, right, and how you can actually trade from there. So basically, this is what I want to do in this video, and for you to really enjoy it. And at the end of this content, if you can really practice and actually backtest this method, trust me, you will really be making a whole lot of money from the market. Just to give you a disclaimer, right, this doesn't mean that this is a 100% win rate strategy. No, it is not. But at least if you can really follow this to the letter, even though you are going to have some losses, but at the same time, you are still going to be very, very, very profitable. So let's start. What are the rules that I gave you in the last class concerning an order blocks, right? You know, I gave you rules concerning order blocks, how I look for the order blocks. Now, this is actually a content that should be given to my mentorship class. I believe I've already taught them this, at the same time giving it for free, so that many of you will not really have an excuse not to be profitable. And as many people that are coming to me asking for help or assistance in how they can actually get my course maybe for free, you will be able to actually make use of this and be successful. And this should be in line with other things that I have also taught, and everything is on this channel. So you can just surf through this particular channel for you to get all those materials, study them, and I can actually guarantee you that you'll be extremely profitable. All right, so before we go into these particular 3 rules, let's quickly do a recap on what we did on an order blocks. You know, many people have they have many definitions of an order block, how they look at an order block. But for me, just like what I said, the credit of this goes to ICT, right? Because he was the one, right, maybe that started that. And for me, I believe that order blocks are just like supply and demand, or some people can actually call it different names. I believe that if anyone can actually sit with the market, you can really get all these informations or the pattern I'm getting in the market. So nobody actually owns any pattern in the market, provided it is actually painted by the market and you are not the one actually painting it. Now you might be the first person to give it a name. That doesn't mean that you actually give that pattern to the market. So all this pattern is what an individual, just a cultural person, can just sit with a forex chart, and you will be able to get all these details out. So I'm going to give credit to him because it was the first person that gave it a name, which is actually an order block. So, and every other individuals have actually been coming and they've been calling it sponsored candle. Some people will call it institutional candle. It's just the same thing. Now, how do I know all these names? I have my students that have actually joined all these groups, right? They came back, or some of them actually left my group and actually go to that group. So it's actually normal, right? We have students coming from their side to my own, and we have others also going from my group to theirs. So it's just normal. So very quickly, so that we not just waste a lot of time, let's quickly look at how an order blocks look like. And just like what I said, we have bullish order blocks and we have bearish order blocks. We have bullish order block and we have bearish order block. So bullish order block is the last bearish candle right before an upward movement which break market structure, and a bearish order block is the last bullish candle, right, that has an impulsive move, followed by an impulsive move that break market structure. So basically, this is what we look at. I believe I've already discussed this and I've already explained this in the video that was made 2 weeks ago, right? You're going to see the suggestion on your screen now, so that you can actually have a follow-up and study through that, through it. All right, very quickly, let's quickly look at how another block looks like. So let's see it through. Right, there was a channel. Right now, as you can see, I've already made a drawing of what I'm looking for already, just as what you can see here. So I said rules of spotting. Right, spotting is not really correct. Right, the rules you can really follow, right, to spot an order block in the forex market. It can actually be used for forex, for indices, for volatility pairs, what other pairs, anything that actually have buy or sell. This particular method will surely works for it. As long as you're actually buying and there are two participants in the market, this will surely works. And just like what I said, look at this drawing. Right, I said another block took out liquidity. That is the basic order block that I'm actually looking out for in the market. Basically, before I actually spot that liquidity, I want to actually spot maybe accumulation phase before then. So just like High City, we said power of three, accumulation, manipulation, they want to see distribution, right? Accumulation, manipulation, right? Want to see distribution. So market will have actually been accumulating before taking out that liquidity. So after this has happened, right, we said it has an impulsive move that break market structure. Look at this impulsive move. Market must moved out from that range with an impulsive move, and it must break a major structure. Right, very soon, maybe next week or next 2 weeks, I'm going to make some series of videos concerning market structure, so that you'll be able to know how to spot a good structure away from a bad structure. Right, also, so you just need to subscribe to this YouTube channel, so that anytime I make a video, right, you'll be able to have access to them and study them, so that you'll be able to become consistent and profitable in the market. All right, so this particular price actually gave an impulsive move that break market structure. As you can see, that it break market structure. So what is the next rule, which is rule number 3? Right, we said it engulfed or has a fair value gap in it. Now a fair value gap is also an ICT term, so all credit goes to him also. Right, as you can see, right, it must have a fair value gap. And what is that fair value gap? It is the gap between these two lines. Can you see this first one here? Let me use a particular stuff to mark it out. This particular low, can you see that? And this particular high, you can see that candle must give a gap. So that gap is basically the things we're actually going to spot in the market, and we are expecting price to pull back into that zone, refill that zone, then actually price should move back up. So basically, I said it engulfed, just like basically your candlestick pattern, an engulfing candle. So that's just a simple way for me to directly say that, rather than saying an LVG or an imbalance or an inefficiency or whatever name people have actually called that. So price moved out of this range and breaks market structure, and it actually engulfed, as you can see, or it gave a fair value gap in it, or it gave an imbalance, or it gave an inefficiency. Right, so another thing is that it rejects on another order block. This is really very important. Now, why am I looking for this rule number 4? Is because I really want to trade in direction with the trend, and provided price has already created an order blocks before that has already give us a particular movement, maybe break market structure, then price pull back to it and actually give us all these rules. This actually signify that this market is actually following the direction. So anytime I spot this kind of order block, I'm very sure that this market, let me rate it, maybe 70% or 80% of the time is going to work out well. So that doesn't mean that I win my trade, all my trades. No, I actually have series of losses. At the same time, my profit is actually sufficient to cover up for all my losses. So don't forget all these 4 rules. Anytime we see these 4 rules in the market, then I am rest assured that I am ready to take a trade. But what about some exceptional, right? What are the exceptional that we can actually have in these particular rules? Now, the only rules I am willing to actually exclude from these rules, anytime I really want to mark another block, right, is this rule number 1. It might not really take out liquidity, it is fine, but if other 3 rules are met, then I'm fine. But basically, I will love to see the 4 rules met. Then I will be very, very happy to trade with the direction of the market. Now, basically, these particular 4 rules have already been discussed last week. Then today I will just show you some examples of the trade I've taken just to show you an example of this, then how you can actually trade in line with that, so that we can make this video short as possible. All right, so don't forget, all these 4 rules is what we are looking for in the market. So as I'm going to be spotting those particular block, right, I will also be stating them out for you, right? So just write them down so that you can actually follow it. Then you can also take a screenshot of this particular image for you to have that, just like what you can see here. Now this is our other block of interest, and basically when price retraces back into this particular block, that is when we will go back to the lower time frame and begins to look for our lower time frame entry structure, for us to trade in line with the trend. Now basically, when I make a video on market structure, all this is actually going to be put together so that you can really have an understanding of how this really works, right? I'm going to make that maybe in 2 weeks time, or maybe in a week time, so that you can really have an understanding much more on how I see this in line with the market structure. So when price pull back into this zone, then I am ready to be a buyer and for price to really continue to go higher. All right, so basically let's go back to that rules to follow, to trade, right? What is actually that rule that I'm actually talking about, right? So these are the basic rules that you really want to confirm in the market before you trade in line with the banks or the smart money or the liquidity providers. Number 1, I said get a directional bias. Now what is that directional bias? You want to trade in a bearish, or you want to take a sell in a bearish market, and you will want to take a buy in a bullish market. Don't actually counter trend. Now if you are not really very good in this, then I will not really advise you to counter trend. So when market is going in lower low, series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? In this particular market, you want to be a seller and you are just looking for our rules to be met. What rules? The rules of market structure, the rules of another block. All these 4 rules, or at least 3 rules, are met before you trade in this light. Now I would really want to suggest that you should confirm this on the higher time frame, the time frame that you are not really going to spot that particular block, right? That shows that if you are really if you want to spot that kind of other block on 4 hour, that I will advise that you check the direction of the daily time frame or the weekly time frame or even monthly time frame for you to know the direction. I'm not really going to teach that now because I'm going to leave that for the mentorship. I've already made a video concerning that for my student anyway, for them to study and for them to follow it in this light. Then at the same time, just for a simple glance of it, right? You can just spot, maybe you are trading 4 hour time frame, then you want to ensure that 4 hour is in a bearish trend when you are going to spot that other block. So that is what I mean by directional bias. So my direction is bearish, so in that case, then rule number 2 will come into play. Rule number 2 will come into play. Now what is that rule number 2? For me to get a good and strong rejection zone. What is a good and strong rejection zone? A good or a strong rejection zone is a rejection zone, or is a order block, or is a supply or demand that met all the 4 rules, or at least 3 rules of what I have given to you. I'm going to show you an example, right? So when these rules are met, then you can be rest assured that you are ready to take a trade. Now then, rule number 3, drop to lower time frame to get an entry confirmation, right? Go to lower time frame and get an entry confirmation. So these are the basic ways for you to trade with the banks or for you to follow the institution. Number 1, directional bias. Number 2, the strong rejection zone, which is actually which might be on order blocks or supply or demand. And number 3, drop to lower time frame after price pullback, just like what we have here, right? After price pullback, right? This is actually our rule number 2. After price pullback, just like what we have here in my drawing here, pull back to this particular zone, then you can drop to your lower time frame of interest or lower time frame of your choice, right? In my mentorship class, I already gave some specific lower time frame or time frame combinations that you can really follow, right? Lower time frame of interest for you to confirm that market structure or the entry and continue with the direction of the market. So very simple, and this is actually very simple. 3 rules, no complication, no complexity, just for you to trade appropriately with just 3 rules. All right, now before we continue, guys, you know that I actually took some time to really study the market and for me to pull this together. So you will want to subscribe to this YouTube channel and click on the notification bell. You know, right, by doing so you are really supporting me and also motivating me to do more. So help me to subscribe to this YouTube channel and click on the like button. All right, so let's continue. Let's quickly see an example that I have. Now I will go to Euro USD. Now all these trade are on my Telegram channel, so you can really have a glance of this on my Telegram channel. You will see how I've actually I've really marked this, then studied them for you to understand how I took my trade. So basically I can see that the 4-hour time frame is bearish. As you can see, the 4-hour time frame is really been bearish. Then if you go to, let's say, daily time frame, right, let's see daily time frame, we can also see there's a sign of bearishness in this price. I've already broken this structure, so there is a sign of bearishness in the market. So let's go back to the 4-hour time frame. Right, I'm going to show you the before chart of this so that we can actually trade in line with that. All right, so this is what we have here. Let me quickly show you the before chart so that we can continue. Right, before. Right, can you see that? So this is the before chart, right? The before chart of the trade I was willing to trade. Now, this particular kind of entry is not really good. I'm not going to teach it now. In fact, I have not really taught my student. I'm really going to explain how I refine this particular zone for me to get an entry. But what is very, very important is just for you to know how to trade effectively. So this is the before chart. As you can see, I've already spotted that the market is bearish. So let's go. The market is bearish. So what did I do? Right, I can already spot all the rules being met here. So rule number 1, it took out liquidity. We have this liquidity gap here. Can you see that liquidity gap here? That's rule number 1. We have liquidity gap, right? Rule number 1. Rule number 2. All right, rule number 2. What do we say? Rule number 2, it has an impulsive move that break market structure. Broke this structure. Basically all this structure was broken, right? It has an impulsive move that break market structure. That's rule number 2. Broke market structure. Number 3, it engulfed. Actually, this really doesn't engulf. I saw that engulfing on the lower time frame. I will not really be doing that now because of my time, but the time frame I used to go the setup was not really on 4-hour time frame, but on that time frame it actually engulfed. I'm going to show you another example anyway. So, and this particular candle also reject on this particular block here. Look at this block, right? That's rule number 4. It reject on this block. Right, what is that block? As you can see, this is the block that it reject on. Let me quickly mark that out. So it reject on this block. As you can see that the candle, this other block of interest, reject on another pseudo other block that we are really looking at. You can see this block also broke structure and it's also engulfed. So price came back to it. So that's the basic thing I'm looking for in the market. So this is now my rejection zone. As what you can see, this is my rejection zone. That is where I am willing to sell from. As you can see that, willing to sell from, that is the other block I'm willing to sell from. Now in this week, right, I also made a video concerning how I use trend line to mark liquidity zones. As you can see, I already have a liquidity zone. So before price will pull back to my rejection zone, I really want it to also take out liquidity before coming back to there, right? Well, really, I've already explained that, so you can just apply that particular basic rules for you to trade effectively. So what did I do? Right, I know I refined this, right, to this particular area. I actually did that on the lower time frame, but I'm not going to do that now, right, because of our time, right? All right, so and I'm going to leave that for the mentorship also. So if you want, just like what I said it's going to be a win-win, right, for everyone that participated in the giveaway. So I'm going to give a 15% discount on my course, so you can actually contact me, right? The contact information is already on this video description. All right, so this was where I was taking my preemptive from, right? I really want price to really give me this. Now let me show you again. As you can see, this was the before. I want price to actually come back to this. Now don't forget, it's always 1 to 10 that I always target on my minimum trade. Although this is actually 4 hour, and I really take some time. As you can see, it's really took some time before that really played out. But anyway, just like what I said, let's just exclude this. I'm going to come back to it later on. So following our rules, right, we said that was rule number 1. Let's go back to that rule again. Rule number 1, what do we say? I said get directional bias. we've already gotten that. Rule number 2, I said get a good or strong rejection zone, maybe other blocks or supply and demand, right? We've already gotten that also. Then number 3, drop to lower time frame to get your entry confirmations. So that is what we're going to do now. Let's quickly go to lower time frames. Now we can see the extent at which price actually pull back to this. On a normal day, I would have actually used either 10 minutes time frame or 15 minutes time frame to get my entries, and so far price has actually gone far to this. Then I can also use 5 minutes time frame to get my entries. But anyway, I'm going to use 15 minutes time frame anyway to get my entries. So let's go. When price gets to this zone, as price actually pull back to it after taking out liquidity, this was when price got to that zone. It took out this high, even though this is not very significant liquidity zone, but this looks like an equal high here as a liquidity zone. It looks like an equal high. As you can see, it looks like an equal high in there, right? So that's what I want price to actually take out that liquidity and pull back to this zone. So by the time price get to this zone, right, so we go to our 15 minutes time frame and begins to look for our entry confirmations So what did I do? Right, so let's just quickly play this out, right, to see if we're going to have a pattern. So we already have a pattern here. Our price is here to break market structure here, even though price already broke this particular zone. So which implies that this particular zone should be our entry point. But I can see that there is a whole lot of accumulation here. I am telling you about what I did. Then by the time I got to this market, I'm going to show you the 15 minutes entry if I could, right? I'm quickly going to show you that the 15 minutes entry. So by the time price actually got to the market, this was when I got to the market. I'm going to show you that. That was the time I actually saw this particular trade, right? At this particular time, that was when I saw it. Price was actually building around this area. Then I saw that it has already built an equal high. Then at the same time, when I dropped to 5 minutes time frame, from here, I can see a KOB here beside a structural break. Don't forget, this particular zone is supposed to be my entry, but I'm not really using that. So on 3 minutes time frame also, let's see what this trade actually gave. We have this particular trade here. So basically, the 5 minutes time frame is preferable. So that was really what I used. I marked that KOB, right? Provided that this particular, now this is where I actually spot that KOB. And this is based on the fact that market has already given me a rejection zone here. Price has already rejected on this particular zone. It has broken this through this zone. So this was a zone I was looking to really sell from. Then I spot this particular area, right? I'm explaining the lower time frame entries now, right? I spot this particular area as a liquidity zone. This particular area is a liquidity zone. So let me quickly show you the before chart of this. Right, the before chart, just a minute. We want to get that 15 minutes time frame. Want to bring that up. Right, so this is it here. As you can see, this was the zone that I used as the entry. This was when I marked the before chart. As you can see, I already spotted that liquidity zone here. So that was what I was expecting. So my pending order was already here. As I was expecting price to actually give me an entry. So this is really what I did. Then I was expecting an entry to really take place. Don't forget, by the time I spot this, I was not able to trade this particular pair again based on this fact, right? Then I will be willing to also see 1 minute time frame or 2 minutes time frame formed on this zone, and that was really what I did. I'm going to show you that now. So price pulled back into this zone. So by the time price actually moved back down, right, this particular trade has already been activated. So if you go to 2 minutes time frame, so it gave us another kind of entry. So that rule was met again. This reject on another block, pull back down, take out liquidity, break market structure. The rules of other block are also met again. So this particular zone is where I took the 1 minute entry trade. Then on 1 minute, I have to refine that to this particular zone, and that was where I took that trade from, as you can see. So the basic target is supposed to be what we have on the higher time frame also. So where your 4-hour target was, that is where your lower time frame target should also be, so that you can actually enjoy massive profit. So let's just go to 1 hour time frame. let's go to 1 hour time frame. Right, where is the first one? This is the first one, and this is the second one. All right, so and 4 hour time frame, you know, a 4 hour time frame, right? This liquidity zone supposed to be a target, right? That's 1 to 24. Then this particular one also, this is about 1 to 60 risk reward ratio. That's for the 1 minute time frame entry, and the lower time frame entry is 1 to 24. That shows if you are risking 1% on this trade, you should be banking 24%, and if you are risking 1% on this lower time frame one, which is 1 minute time frame, you should be banking 60% of your account, right? And that is how you can actually do that. Don't forget, right, I personally don't trade 1%. I risk 0.25 of my accounts. So very quickly, let's go to another example, right, which was on Euro JPY. So don't forget the Euro JPY trade. I also got that in the market, so I'm going to show you the before chart of that. All right, I'm going to show you the before chart of Euro JPY. So the trade was taken on 1 hour time frame. I can spot some liquidity zones that is building around that. Then you can also see my rules being met. So what are the rules? Price took out liquidity, as you can see, right? Let me bring that up again. Price took out liquidity, reject on another order block, as you can see. Then I have an impulsive move that break market structure, then expecting price to pull back to that zone. And not only that, let's quickly go to that 1 hour time frame. 1 hour time frame. So where was the zone? Where this is it now. So look at the rules. Price took out liquidity, that's rule number 1 of another block, right? Price took out liquidity, number 1, then reject on another order block. As you can see, this was it here. Price reject on here. So this is now our order block of interest, this particular candle here. So that candle also engulfed, as you can see, and that's an impulsive move that eventually break this structure. On my way going, I can spot some liquidity zone that this price has actually given to me. So what did I do? This was where I got my entry anyway. I got immediate entry here. I was targeting 1 to 10. As you can see, we have it here already. But I'm going to explain the lower time frame entry just as our rule actually states. Based on the rules I just gave you guys, get the directional bias. So what is directional bias of the Euro JPY? Price is already bearish. We have higher high, higher low, lower high, right? We have lower low, lower high, lower low. So price already gave off a confirmed market structure. After giving us this particular structure, taking out liquidity, giving us all this structure, then I'm willing to sell here. So this implied that I went to 1 minute time frame to actually pick my entry from there. So let's quickly go to 1 minute time frame and just get our entry. 1 minute time frame, right? So how did I get entry from this particular trade? So this was the exact zone. Let me quickly have this particular replay back. So by the time price actually pulled to that particular 1 hour zone, so let's quickly play this and see what really happened. Price pulled back there. So what did I see? I saw that price came back here to break market structure. As you can see, price break market structure here. Then we have an MBB. If you're my student, you should actually know what an MBB is. I didn't refine this anyway. I've already taken an entry on the higher time frame, so refining it is not really a problem for me. Again, as you can see, this was where I want to take an entry from, right? That particular zone. I'm basically on this particular zone, and this particular block also fulfills all the characteristics of another block we're looking for, right? Took out this liquidity here, reject on this particular block, even though this is not a clear block, then has an impulsive move that breaks structure. So we're expecting price to pull back into this zone for us to continue to trade down. So that is really what I was expecting to do on this particular block, right? I have about 5 pips stop loss. All right, then this is it here. Then the target, 1 hour time frame, let's go there. Right, target can be on this particular low, which is about 1 to 10 risk reward ratio on one minute time frame, right? 1 to 10 risk reward ratio. Now you can actually be able to witness that this pair actually dropped way more than that. As you can see, right, this particular trade actually gave us perfect one, right? As you can see, price pull back to this zone, right? If you're my student, you should understand what you can do here. We have our SSP pattern formed here, right? As you can see, that price took out liquidity here and actually pulled back to that zone. After taking out liquidity, then price actually dropped down very hard after fulfilling the rules. Don't forget the 3 rules: directional bias, get a strong order block, then also you want to really get lower time frame confirmations for you to continue with that trend. All right, so again, before we continue, if you are here to subscribe and you've already gotten value from this particular content, please hit on the subscribe button and also click on the notification bell, and don't forget to click on the like button so that it will give YouTube to recommend this video to as many traders as possible. And don't forget, I'm giving a 15% discount on my course. If you're interested and you really want to be a part of this giveaway, then you can actually send me a DM on Instagram or Telegram or on my emails, right? All these particular informations are already on the comment, on the description box, so that you can really contact me. And at the same time, the owner of this giveaway should really contact me. And just like what I said, when this particular channel hits 10,000 subscribers, I will be willing to give 5 slots, right, of free mentorship to as many lucky traders. To those 5 lucky traders. Right. Lastly, right, it was on CAD JPY. That was another trade I took. Now, many of these trades actually work out in my favor last week. Right. These are just a trade I took last week. I'm using to explain this particular ideology now. So it was actually on 45 minutes time frame also, and this was a before chart, right? The before chart of that. You can see this was the before chart. I will just be very fast on this because of my time. It fulfills all the rules at the same time. As you can see, all that I have in there, right? So what did I see here? Right, price to call liquidity. Right, price to call liquidity. As you can see, reject on another order block, which is still the order block. As you can see, then we had something that gave us an impulsive move. It engulfed. We have an engulfing there, right? Impulsive move down. Or really, it doesn't break structure, right? On 30 minutes time frame, you see it there, but actually have a breaker. So this is not really a perfect one. It broke this particular zone and broke this particular breaker. So that's really what I capitalize on to trade this particular pair. Basically, I took my pre-entries, but I'm not going to show you that, as I already have that on my page. But the 1 minute entry, let's quickly go to 1 minute. All right, for us to really take our entry. Right, so I went to the 1 minute time frame. So what did I see? What did I see? What did I see? Just like the same way we took entries on the Euro JPY. So when price pulled back to that zone, then we have price actually moving down. Price was moving down. Then immediately we have price breaking the structure. It gave us an impulsive move. This particular block is also rejecting on this block, fulfills all the rules of another block, break this particular zone. So what did I do? Right, I marked this particular zone as the zone I was willing to sell from. So my stop loss on my entry was placed. Right, I really did not show these lower time frame entries on my channel, so that I will not really load you guys with that on my Telegram channel. So that was a stop loss anyway. So I was willing to really trade in line with the trend in that manner. Let me go to 3 minutes time frame, just to adjust this. So let's see how price eventually played out. So as you can see, price pull back, go back to 1 minute time frame. Price pull back to that zone, reject on that zone, and what do we do? Right, you can target the low. All right, which low are you targeting? Let's go back to 45 minutes time frame. Which low are you targeting? Right, you can target this low here, or 1 to 10 is okay for you. 1 to 10, as you can see, 1 to 10, that's 1 to 10, or you can target just this low. That's about 1 to 17 risk reward ratio. Let's see if price actually got there. Right, fantastic. As you can see, so that is how you can just trade in line with the banks and also trade effectively in the market. Just clean chart and nice way to actually trade. I hope you understand that. So this is also part of my giveaway. I'm teaching you guys my strategy for free, right? And much more opportunities. What we have in the mentorship is just some webinars, even though it's actually been a while. I actually had that about 2 weeks or so, right? So we're also going to have some interesting things to actually do together. So you can join the Telegram channel for you to have access to all these materials I've actually made available. I mean, my chart, the before and after. Then also you can study this many times for you to actually get consistent in your trading. Then also don't forget to also apply for the mentorship. The mentorship class is already open now, and we have a 15% discount, right? And this is just for this month. Next month I will not really give a discount any longer. All right, and just like what I said, the winner of the giveaway should message me. And if you are new here, ensure you subscribe to this YouTube channel. And if you get so much value from this, please like this video. And don't forget, just like what I said, a giveaway, another giveaway will be after we actually get 10,000 subscribers on this page, right, on this channel, right? And this is by you making a comment, right? This is by you making a comment with an hashtag. Make a comment with an hashtag. Two things. Hashtag liquidity, right? Then hashtag, let's have two hashtag. All right, 10K sub, right? So these are the hashtags. I want you to make a comment of how this particular video or my course or my content has actually been beneficial to you. Then at the same time, give us this item. So I'm going to select 5 people, right? That is when we get 10,000 subscribers at the end of, maybe I don't know when that will be, but I'm going to make reference to this video to announce the winner. All right, like this video, make comment, and also subscribe to this channel. And if you are here to follow us on Instagram, please do that as soon as possible, right? Because I'm going to announce, I still have so much interesting things to do on Instagram also, right? So to give a giveaway, and majorly the setup and signals I really want to be giving will be on the Instagram page. So you are encouraged to really subscribe. All right, guys, thank you for listening. I will see you in the next